Hello, today is Sunday, June 21st, 2026. Here is your daily signal. According to Bloomberg, Kevin Warsh's debut as chair of the Federal Reserve brought an immediate shift in monetary strategy as the Fed held rates steady but stopped providing detailed forward guidance. Warsh was appointed by President Donald Trump and oversaw his first FOMC meeting on June 17, 2026, at a time when inflation pressures and market sensitivity to Fed communications were running high. The Federal Open Market Committee FOMC is responsible for setting U.S. monetary policy, including interest rates and the forward guidance used to shape market expectations around future rate decisions. Business Insider highlights that Warsh quickly launched multiple internal task forces to review strategy, data usage, and communication methods, a classic corporate-style reform approach. The key move was to replace highly detailed forward guidance with a broader promise to deliver price stability without specifying timelines or triggers for rate changes. Among the immediate impacts, reduced clarity on future rate moves could lead to greater market volatility as investors react to less information from the Fed. Over the medium term, the shift gives the central bank more flexibility to respond to economic surprises, and international central banks may adjust their own policies in response to perceived uncertainty or evolving norms at the Fed. The creation of new task forces may also bring operational and analytical changes, potentially affecting the monetary framework for years to come. Next, onto SpaceX's IPO and its ripple effects. Fortune reports that SpaceX's much-anticipated IPO has made waves, both in the tech sector and at the boardroom level, with Roelof Botha, ex-Sequoia Capital partner and PayPal Mafia member, joining SpaceX's board and reconnecting with Elon Musk after more than 2 decades. SpaceX was founded by Musk in 2002 and, with its public debut, became one of the world's most closely watched technology companies, propelling investor excitement and scrutiny across the broader tech market. Its IPO has elevated the company's valuation, influencing investor sentiment and reinforcing SpaceX's status as an innovation leader in aerospace and technology. On June 17, 2026, analyst Paul Meeks flagged 3 risks that could trigger a drop in SpaceX's stock: its high valuation, the impending end of IPO lockup periods, and upcoming earnings reports. Meanwhile, Big Short investor Michael Burry has made it clear he's steering entirely clear of SpaceX shares, citing concerns about the company's value and risk profile. As these factors play out, there's likely to be heightened IPO activity across the tech sector, as investors track SpaceX's stock for comparable opportunities. Roelof Botha's appointment to SpaceX's board may shift board dynamics toward Silicon Valley practices and strategy, and the looming lockup expiration could bring volatility to both SpaceX's shares and wider tech sector sentiment. High valuations and a model driven by acquisitions may prompt more scrutiny and competitive responses from other major tech firms. Next, we look at SpaceX's AI-driven revenue surge and its projected effects on aerospace market valuations. Next Big Future is projecting that SpaceX's AI-powered revenue growth could dramatically alter aerospace market valuations, echoing the pattern seen in Micron Technology's explosive AI turnaround between 2024 and 2026. By April 2026, SpaceX had already achieved an AI revenue rate of $1 billion per year, with expectations to reach an astounding $33 billion annual run rate by October 2026. Micron's experience with quarterly revenues jumping from $5.8 billion to more than $20 billion, and its stock trading at multiples of previous peaks, serves as an instructive benchmark for SpaceX's anticipated trajectory. SpaceX's president, Gwynne Shotwell, is driving aggressive launch operations, with Flight 13 set for July and Flight 14 for August, supporting the company's rapid cadence and scaling of AI-enabled services. As investors price in these revenue expectations, aerospace market valuations may see substantial upward revisions. In the short term, SpaceX's financial performance could spark significant capital inflows and repricing of aerospace-related equities. Medium term, continued Starship launches and the scaling of AI services could set new standards for profitability in aerospace, pushing rivals to accelerate their own adoption of advanced AI technologies to keep pace with SpaceX's surge. Now, onto the markets. In international markets, Japan outperformed with a daily move-up of 1.9%, while Taiwan saw the largest momentum rise among Asian markets. Among European countries, France showed a solid month-on-month gain of 3.13%, Italy and Spain both advanced over 5%, whereas the UK edged lower by roughly 1%. Chile slipped by 0.85% for the day, but still posted a 3.25% monthly gain. In commodities, U.S. oil inched up 0.56% day-over-day despite a sharp 24.9% monthly decline. Copper also moved higher by 0.57%, while platinum fell nearly 1.9%. Gold and silver each retreated, with silver dropping more than 1.8%. Agriculture was weaker, down 0.78%, and corn declined over 1% for the day. Uranium rallied by 1.44%, while lithium dipped slightly. In the favorites group, AMB surged by nearly 4.9% and was the top performer, while ARM experienced a substantial 49% day-over-day increase. Apple and MSFT showed minimal changes for the day, but both saw a mild loss for the month. Intel jumped by over 10% on the session. In U.S. sectors, semiconductors soared more than 6.6% led by Marvell and ARM. Clean energy advanced by 5.2%, while healthcare and finance sectors both slipped. Transportation rose 1.7% on strong momentum, as real estate and agriculture recorded slight declines. That's it for today. You can find more news and details on our website. Goodbye.